It doesn't take a rocket scientist to connect these dots.
Right.
AI is taking jobs. Another great example, Palantir. They just reported earnings last night. We're recording this on Tuesday, August 5th. Palantir reported Monday night, August 4th. I actually sent a text to a buddy because when I read it, I was like, are you joking? This is what the Palantir CEO said. Alex Karp looks like a mad scientist. I respect the hell out of the guy. Super smart, big visionary, one of the voices, I would say one of the top three or four voices to listen to when it comes to AI. Here's what he said last night when that company reported earnings. This is a direct quote. We're planning to grow our revenue while decreasing our number of people. This is a crazy efficient revolution. The goal is to get 10 times revenue and have 3,600 people. We have 4,100 now.
Wow.
Well, the takeaway in these earnings reports is twofold. One, AI is taking over the world, and if you're doing something in AI or around AI, you're reporting great numbers, and if you're not reporting great numbers. And if you're reporting great numbers, your stock's going higher, and if you're not reporting great numbers, your stock's going lower. So that's kind of an internal tug of war that's going on in the market right now. Is AI stocks are ripping higher on great earnings and great reports and fantastic growth, and other stocks are not because tariffs are indeed kind of slowing the economy. Consumer spending is stable but not exactly accelerating higher. Business investment has been largely paused. So there's a lot of uncertainty out there, and you're seeing that show up on a lot of the other earnings reports we didn't talk about today.
Hello and welcome to Being Exponential with Luke Lango, where we'll discuss the economy, markets, technology, lifestyle, all from an exponential perspective. It is August 5th. I'm your host, Brooke. Let's dive right in. So, we're going to start this week off on a pretty dour note, Luke. The jobs report came out and it was awful. The past month was about 73,000 jobs, but not only that, the past couple of months were revised down by almost 250,000. So really negative, a pretty bad outlook on the economy. And then to top that all off, we try to be pretty apolitical here on this podcast, but Trump did fire the commissioner of the BLS with the dropping of the particular statistics. That sets a pretty bad precedent in terms of how we handle data, how we let it affect the economy and things of that nature. So, a lot to discuss here, Luke. How are you feeling? What are your thoughts on the jobs report that just came out?
Yeah, so it was a miserable jobs report. And unfortunately, firing the BLS chief is not going to fix the jobs report because the big story that everyone's missing is everyone. So people are politicizing the report, of course, right? Everything is
Right.
politicized these days. So in that political lens, everyone's either like you're on the left side of the aisle. Oh my God, the tariffs are causing all of this economic turbulence, and the job market is breaking, and we only added like 100,000 jobs in 3 months. A regular good economy averages 150,000, 200,000, maybe even 250,000 jobs per month. According to the data, we've only added 100,000 over the last 3 months, so about 30,000 a month. That's pretty miserable. The 6 month moving average on jobs has dropped below 100,000. It's about 80,000 right now. Fun, depressing fact. Every time that the 6 month moving average on jobs job growth fell below 100,000 for the first time in a cycle, that was a predictor of a recession. In fact, I can pull up a chart for you right now. We just got that, right? The 6 month
Yeah.
moving average on jobs did just fall below 100,000 for the first time in this cycle. So very bearish precedent there. Um, this chart's all whacked out, but let me zoom it in so you can see it more appropriately. Boom, 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 boom. So that yellow line right there is that 100,000 line. The orange line is a 6 month moving average. Let's go back to 1990. First time we fell below it in this cycle, the late 80s expansion. That was in August of 1990. Boom. That was the early 1990s recession. Then we stayed above it throughout the entire 1990s economic expansion, but then we dropped below it in October of 2000 right here. Boom. We fell into that early 2000s, that dot-com bust recession. Then we had this massive expansion. Orange line stayed above that yellow line. And then boom, here in July of 07, we fell below that 100,000 on the 6-month MA of non-farm payrolls growth. And that was in, like I said, July of 2007. Boom, this is the great financial crisis. Then throughout the 2000s, we stayed above that 100,000 level, constant expansion. And then March of 2020, of course, COVID, boom, we collapsed below it. And that was the COVID recession. So as you can see, this is the first time we've dropped below it in this cycle, July of 2025. So that's bear. So politically, on the left side of the aisle, tariffs are causing job destruction. We're going into recession. Then on the right side of the aisle, you got, the data's warped. The BLS person was appointed by Biden in January of 24, and she's been consistently wrong, and so you can't trust the data, la-di-da-la-di-do. So unfortunately, all this is getting politicized. But amidst this massive what's the word? Would it be politicization?
Yeah, you're right.
Politicization? I'm missing a C in there. Or does the C go away when you put in the Z? Anyways, you get what I'm trying to say. Amidst everybody trying to politicize the data and having their own opinions, whether they're liberal or conservative, Democrats or Republicans, people are missing the big story. People are completely missing the 400-pound gorilla in the room, which is that this has nothing to do with tariffs. This has nothing to do with politics. This has everything to do with artificial intelligence. That jobs report was weak because of AI. AI is taking jobs. Democrats, Republicans, it doesn't matter which way you look at it. It doesn't matter what president you like, what president you don't like, who you voted for. AI is taking jobs. And that jobs report, I think, has data to prove it, but I got better data to show you right now. Look at this chart right here. So what this graphs is the number of job postings across a variety of websites for different types of jobs over the last 2.5 years, ever since the AI boom really began in late 2022, okay, or early 2023. The shocking thing here is, of course, all job postings are down, but look at entry-level jobs with high AI exposure. That's going to be this one right here, this blue one. That's minus 41%. So entry-level job postings with high AI exposure, coding, software engineering, sales, stuff like that, those job postings are down 41% over the last 2.5 years, and more specifically, really, ever since the launch of ChatGPT. Even entry-level jobs with low AI exposure are down 16%, are down 33% over that time. And even non-entry level job postings with low AI exposure, so what you would think are the most shielded from the AI jobs apocalypse, even that is down 16% since ChatGPT launched. The AI jobs apocalypse has arrived. What you're seeing in that jobs data is not tariffs are causing business uncertainty. It's not the BLS is rigging the data. What you're seeing in that jobs report, in that week jobs report, is AI is taking jobs. Big picture here, or another big data point here, Lemonade. We've talked about Lemonade on this podcast before, right? The AI-driven insurance platform. They just reported earnings. Absolutely stellar earnings. Just wrote their numbers down. Customers up 24%. Revenue, a premium per customer up 4%. Revenues up 35%. EBITDA losses narrowing. Q3 expected revenues up 36%. Q4 expected revenues up 42%. Acceleration upon acceleration. Gross loss ratio down 67%. Fantastic growth numbers across the board. Why is that relevant to this conversation? What does that company do? They use AI to automate the entire insurance process. They use AI AI to assess risk. They use AI to underwrite policies. They use AI to sell products. They use AI to review claims. They use AI to do everything in insurance. That company's on fire right now. The company that uses AI to replace humans in the insurance process is on fire right now, and the stock is soaring. At the same time, these non-farm payroll report is super weak, and then the numbers are super awful. At the same time that we're seeing entry level and even non-entry level job postings absolutely crash. It doesn't take a rocket scientist to connect these dots.
Right.
AI is taking jobs. Another great example, Palantir. They just reported earnings last night. We're recording this on Tuesday, August 5th. Palantir reported Monday night, August 4th. I actually sent a text to a buddy because when I read it, I was like, are you joking? This is what the Palantir CEO said. Alex Karp looks like a mad scientist. I respect the hell out of the guy. Super smart, big visionary, one of the voices, I would say one of the top 3 or 4 voices to listen to when it comes to AI. Here's what he said last night when that company reported earnings. This is a direct quote. We're planning to grow our revenue while decreasing our number of people. This is a crazy, efficient revolution. The goal is to get 10 times revenue and have 3,600 people. We have 4,100 now.
Wow.
He's saying that he wants his company to grow revenues by tenfold while decreasing headcount by what
By
is that?
tenfold.
By 12%. He wants to increase revenues by 1,000%, 900%, 1,000%, while decreasing headcount by 13%, by 12%. You think that's crazy? Well, get this, because the chief technology officer came on the conference call and said that they've seen their revenues rise 88% in the last 2 years while growing headcount by just 12%. So they've seen revenues grow 88% over the last 24 months, headcounts up just 12%. And that was in the first 2 years of this, pretty much baby AI stuff, right? Does
Right.
the AI we've gotten so far, these Gen AI tools, baby AI stuff. As we get into agentic AI, we get into physical AI, that's the AI that's really going to change the world. That's the AI that's really going to take jobs. That's why Alex Karp is saying, okay, last 2 years, 88% revenue growth, 12% headcount growth. Well, next few years, 1,000% revenue growth, 12% headcount decrease. AI is taking jobs. And so I just get really frustrated when I see people try and politicize that jobs report from last Friday, or politicize the BLS, or just look at this through a political lens, because by looking at it through a political lens, you're completely missing the meteor that is heading, the asteroid that is heading for the global job market. And if you ignore that, you're going to get stampeded by it. You're going to get steamrolled by it. You're going to get eviscerated by it. The labor market is going to morph into a situation. It's going to be an oligarchic situation where the
Mhm.
few people who see it coming, leverage AI to dominate their industries, like lemonade, are going to create these monopolies, these oligopolies in these industries, while everybody else goes the way of the dodo bird, goes extinct, goes bankrupt. That is the reality, the divide that is coming towards us. And that weak jobs report last Friday, that was a hint of what is coming. That was a taste of what is coming. So that's my read on it. Stop politicizing this and start realizing this is the tip of a massive iceberg that is going to profoundly change the economy, society, politics, change everything. And you need to see it coming, get prepared for it, and adjust your portfolios, adjust your lifestyle to win in this new age of AI.
Right. Yeah. Speaking of the depoliticization of the jobs report, even on the BLS's website, they have a quote. The old saying, is it a glass half full or is it a glass half empty? On the website, they say it is an 8-ounce glass with 4 ounces of liquid. There's no politics involved in those numbers. The numbers are the numbers. So you got to take it at face value. And just mentioning all the massive job loss, that in juxtaposition with Zuckerberg offering $250 million to hire someone. It really highlights the divide that's happening in the job market in general. You have
It,
thousands of people with no jobs, and then somebody being offered $250 million for one.
That's the nail on the head, Brooke. I mean, we are seeing AI engineers. They are signing superstar athlete
Yeah.
contracts out here. Like we're really like these are Messi contracts. These are
Yeah.
Ronaldo contracts. These are LeBron James contracts, and they're being signed by coders off in Silicon Valley. Like this is a new era for compensation for tech and for AI specifically. Meanwhile, to your point, 250,000 jobs disappeared over the last 2 months.
Mhm.
Job growth is its weakest since COVID, and before that, since 2010. So we are
2010.
in like this massive bifurcation of the economy, and it's happening in the market right now. This is why, again, AI with AI, all in with artificial intelligence. This week in our model portfolios for our subscribers, we have seen so many of our AI stocks just report these massive double beat and raise earnings reports. Demand is surging, revenues are soaring higher, profit margins are expanding, profits are exploding, cash flows are exploding. Whether we talked about Lemonade, Axon's another one of our favorites. Palantir is another one of our favorites. Meta, we saw that. Microsoft, we saw that. We've seen this across the board with everybody, okay? Meanwhile, jobs are disappearing. Meanwhile, wage growth is stagnating. Meanwhile, I go on TikTok or Instagram Reels or Facebook, whatever the heck it's called, and I see all of these Gen Z and millennial people complaining about how tough life is and how expensive things are and how I can never afford a home, et cetera, et cetera. And then you have these $250,000 AI software signings, right? Or these $250 million AI software signings, excuse me. That's the bifurcation of the economy. That's the bifurcation of the market. That's the bifurcation of jobs. And that, again, this is the first inning. I do think that there's going to be a bust in AI stocks eventually. I don't think this boom's going to last forever. But in terms of a technological paradigm shift, in terms of this, the socioeconomic impact of artificial intelligence, we are in the top of the first inning. The next 8 innings, 8.5 innings, will bring about so much change it will boggle your mind. Work as we know it will not be what it is. In 5 years, it will be fundamentally different than what it is today. In 10 years, it'll be even more fundamentally different. The way the market works as we know it. Everyone's like, oh, big tech stocks, they can't just keep on going up. Yes, they can keep on going up because they have the best AI, and AI is proliferating throughout every facet of the global economy. Look at the earnings reports that we were just delivered. They were fantastic across the board for big tech firms outside of maybe Amazon. And that speaks to their increasing dominance. I messaged my team when all those reports hit the tape. I was like, this feels like a crossing the Rubicon moment,
Mhm.
when Julius Caesar, famously or infamously, depending on how you look at history, crossed the Rubicon with his army, right? And the Roman Republic turned into the Roman Empire. This feels like a crossing the Rubicon moment to me. Jobs report weak, economic data just kind of limping along, but big tech just grand slam after grand slam, slam dunk, touchdowns. They're just firing on all cylinders. They are turning into, I mean, you think they own the world now. They're just getting started. And so if you want to succeed in this new paradigm, whether you're talking about your career or you're talking about your finances, whatever it is, you just have to go all in with artificial intelligence. Career wise, you have to adopt AI skills, embed AI into your workflows, be part of the oligopoly, be one of the few in your industry, in your field that leverages AI to do stuff more efficiently, serve products and services more cheaply, get more done with less, produce more output, make more products, whatever it may be. Use AI to improve your efficiency in your job. For example, here with, as a stock picker, I'm using AI every single day to help me do research on stocks, help me put out content on stocks, help me do research on big tech mega trends, help me analyze transcripts and conference calls, help me go through the numbers. I'm using AI for all of that. What used to be an 8-hour workday, I can now get done in 2 hours what I used to get done in 8. That's leveraging AI. Everybody in every career should be doing that right now if they want to be one of the few that succeed in this age of AI. And then when it comes to investments, do not mess around with non-AI stocks. I've made this mistake in the last year. Even I underestimated the size and rapidness of this trend. Even I went out there and I was like, you know what? Let's take a shot on Nike. Let's take a shot on Lululemon. Let's take a shot on Chipotle. Well, guess what? They're non-AI stories and they're not doing doggone squat for us. But you know what's doing great for us? Company like Lemonade, company like Palantir, company like Axon. All of our AI stocks are absolutely soaring, while in the rare instances, and we rarely do this, go outside of the AI world, in the rare few times that we have done that, didn't work out, hasn't worked out. Because nothing over there is working out. You have to look at everything through the lens of AI. And if it's got a good AI story, it's got good AI growth, good AI products and services that are being adopted, then get in the stock. If it doesn't, then get away from the stock. AI with AI, that's the motto. Do it everywhere. Lifestyle, career, another example, investments, another example. My kid, 5 years old, just started kindergarten. Right down the street. One of the reasons we moved this house in Phoenix is we're close to the elementary school. I love it. I think it's going to be great. But you know what I just read? Remember we talked about that Alpha school in Texas, the AI school in Texas?
Yep.
They just opened a location in Scottsdale. They just opened a location, I don't know, maybe 15, 20 minutes from my house. You know what dad's doing right now? Dad is doing all the research he can to figure out, okay, wait, how does this school actually work? Like, what are the hours? What's the enrollment? I think they only do 25 kids, about 40 grand a year. Super expensive. I get that. But I'm looking at him, okay, wait, is this an option for my kid? That's how serious I'm taking this AI with AI thing. It's not just about stocks. It's not just about investments. It's not just about personal finances. It's a way of life. And I'm going so far as like exploring options. I think we're going to keep my kid at the regular elementary school for now, but I'm exploring options. I am open to looking at options that transform the way she learns with AI. So yeah, I mean, that jobs report to me, again, back to the original question, we kind of got off topic there, went on a few anecdotes, but that jobs report to me is, I mean, it's a wake up call to everybody. AI's taking over. Get on the train or get left behind.
Yeah, definitely. The term I hear being thrown around a bunch is a new wave of technocratic oligarchs, and it's just honestly it's becoming more and more real and substantial every day. Take that with a grain of salt, what have you. But I did want to ask Luke. We know Jay Powell stayed his hand in terms of rates
Mm-hmm.
for this past cycle, but looking forward, we have this jobs report that was pretty bad, and then all-time highs in like a bunch of AI stocks, and then we have the tariffs that are finally in place uh, on August 1st. What does that mean for the Fed? What do we expect the Fed to do now? What?
Yeah, so here I pulled up the interest rate probability matrix out of Bloomberg. So the odds of a September rate cut are 90% now. You see this
Yeah.
0.9 or 90% right here, percent hike cut. So that was less than 40% before the bad jobs report. So now we're up to 90. So the market basically views that as a lock. We also got a bad ISM services report today for July. So it does look like, rate cut is definitely coming. The pressure on Powell is building.
Mhm.
I think Trump is down to two people for a replacement chair. Treasury Secretary Scott Bessent's not one of them. He doesn't want to be Fed chair. Makes sense. Doing both at the same time would be kind of difficult. But in any event, yes, a rate cut is coming. And now the market's looking at, kind of go into a year from now, July 26th, the market's looking at 4.5 cuts by then.
Wow.
That was down around three before that week jobs report. So we've essentially priced in 1 to 2 more rate cuts over the next year, with that first cut coming in September. I think this outlook is pretty accurate, given the changes in the job market, given we haven't really seen a lot of tariff fueled inflation yet. And I don't think we will, because I think tariff
Mhm.
rates are moving lower, not higher, effective tariff rates, given all the carve outs and exemptions. And then also you kind of throw in the fact that well, Trump's going to be replacing the Fed chair with somebody that
Right.
is probably more open to cutting interest rates. And I think, yes, the data, the fundamentals support this outlook, the outlook that we are going to get a first cut in September, and we are going to get 4 to 5 rate cuts over the next year, which is, 100 to 125 basis points lower on the federal funds rate. How is that going to translate to the 10-year treasury yield, which is all that really matters, because that's what mortgage rates are based off of, auto financing rates or credit card rates. Everyone's worried about the Fed funds rate. I don't know why. It's all about the bond market. The 10-year treasury yield determines everything. 10 years down to 4.2%. I think if we do get 100, 125 basis point reduction in the Fed funds rate, maybe that 4.2 goes down to 3.7, 3.6, 3.5. I don't see it going all the way to 3. I think it kind of hangs around mid threes. That's a 70, 80 basis point reduction in, real market rates. That means 70 basis points lower on mortgage rates, 70 to 80 basis points lower on auto financing rates, credit card rates, et cetera, et cetera. And that will provide juice for the economy. I think the economy will re-strengthen over the next 12 months, and that will provide a launching pad for stocks to move higher. So I do think that the weak jobs report, from a market perspective, is actually a good thing. But then tying this all back to AI, right? Which
Right.
stocks benefit the most when interest rates go lower? AI stocks, long duration assets, those stocks that are trading at 100 times forward earnings, 70 times forward EBITDA, 12 times forward sales. Those stocks, because the way you value a stock, right, is its current value, which is what its balance sheet says it's worth, its assets minus its liabilities, plus the net present value of all future cash flows. When you have a mature growth company, a large insurance firm, a large healthcare firm, a company like Coca-Cola or Home Depot, a lot of the value is tied up in the current value, the balance sheet, what the balance sheet says it's worth. Not a lot of value is tied up in the net present value of all future cash flows. When you have young AI companies, when you have AI stocks like Palantir, Axon, Lemonade, the balance sheet doesn't mean diddly squat. The entire value of the company is tied up in the net present value of future cash flows. The net present value of future cash flows is directly impacted mathematically by the interest rate, because what do you discount those future cash flows by? You discount them by the risk-free rate. You discount them by the prevailing market rates. So if the prevailing market rates go lower, then the net present value of those future cash flows go higher, and the more value a specific company or stock has tied into those net present value, into the net present value of those future cash flows, the more that stock is disproportionately benefited by lower rates. So we get into the situation where the Fed starts cutting again, interest rates go lower, mortgage rates go lower, treasury yields go lower. Who wins? AI stocks. And so we're back to this same
Mhm.
paradigm we were just in, which is AI with AI, all with artificial intelligence stocks. If rates do go lower, the biggest winners there are going to be the stocks that are already the biggest winners. So I don't think you need a portfolio adjustment for interest rates. If you're AI with AI, you don't need to do anything besides sit tight with these AI stocks that just keep on winning.
So almost a positive feedback loop for AI stocks, but the inverse for almost everything else.
Yeah, that's exactly right. Again, the bifurcation of the economy, of society, of the labor market, of the stock market. On one side, you have the AI haves, AI stocks,
Mhm.
AI software engineers getting these $250 million pay packages, companies and industries using AI to dominate their industry. That's what you have on one side. On the other side, you have stocks that are going nowhere and won't go anywhere anytime soon, people that are losing their jobs, people that are just sitting and complaining about things. That's the bifurcation you're getting in the economy, and it's just starting. It is literally just starting. So get on the right side of that bifurcation, win and win big, because a lot of these stocks are handing investors massive, I mean, truly massive returns. So yeah, jump on that train, jump on that ship. That's the one that's going to make you rich, not the side of doubting AI, not the side of being a skeptic about these things, not a side of holding on to the past and having nostalgia for when things weren't done by machines. That's going to get you nowhere fast. Embracing AI, though, is going to get you somewhere good really fast. My 2 cents.
All right. So, since we're on the topic of these AI stocks, I want to dig into some earning reports in a rapid fire succession. I want to start it off with that company that was offering those $250 million pay packages, Meta. Thoughts on that
Yeah.
earnings report?
So I think last week we talked about Google,
Right.
Alphabet, and how their earnings report was this mic drop moment for AI. Well, Meta's was another mic drop moment for
Hmm.
AI. The company's growth is absolutely on fire. What we got, ad revenues up 21%. That's the best they've reported in a year. Total revenues up 22%. That's also the best they've reported in a year. The guide for Q3 calls for 21% revenue growth, so essentially no slowdown whatsoever from their best growth rates in a year. Operating margins 43%, up 500 basis points year over year. EPS plus 38%. So we talked about all these AI companies reporting these blowout numbers with accelerating revenue growth, profit margin expansion, and really, really big profit growth. That's Meta. So we're seeing that, and guess what's driving all of it? I mean, AI, right? Of course, it's AI. They're
Right.
using AI to improve the content on their feeds. So the AI-driven content feed algorithm that's led to what was it? It was a time spent on Facebook was plus 5% in the quarter. Time spent on Instagram was plus 6% in the quarter. That's just the quarters. From Q1 to Q2, time spent on Facebook, average per person, up 5%. Instagram, up 6%. That's massive growth quarter over quarter for a very mature, established platform like Facebook, like Instagram. And it's all because
Right.
the AI algorithm just knows exactly what you want to watch. I mean, I hate it. I only have Facebook, but I love and I hate this algorithm, man, because I'll be here, I'll be working, real hard, kind of plugged in, and then I get a little burnt out. I'm like, okay, let
Mhm.
me see what's going on. Open up my Facebook. 30 minutes later, what the heck happened?
Right. Right.
Like how did I spend 30 minutes watching Facebook videos and posts? Like how did that happen? So it's a love-hate thing. I hate the fact that statistic is true, but I don't doubt it because I'm part of it, and I can speak to it. Meta AI now has over 1 billion monthly active users. They're using AI not just for the content feeds, but for ads, right? They have the AI powered ad targeting model, where to put ads, what time of day to put ads in certain locations. That has led to a 5% boost in ad conversion on Instagram and a 3% boost in ad conversion on Facebook. Again, just in the quarter. So meaningful, measurable improvements in their ad business because of artificial intelligence. Ray-Ban Meta AIs, I got mine right over here. Why don't we pull them out? Ray-Ban Meta AIs, now I look smarter and more sophisticated. Those sales continue to accelerate. Demand continues to outstrip supply. Physical AI is here. They're building out Hyperion, which they want to scale up to 5 gigawatts over the next several years. That's their new AI data center thing. Prometheus cluster is coming online next year. That's the world's first 1 gigawatt plus cluster. Let's see what else is going on here. Most important comment from Zuckerberg in the call. This is a quote. AI superintelligence is now in sight. Just sit on that one for a moment. AI superintelligence is now in sight. That's crazy. That's absolute. I mean, we knew when he was
Yeah.
spending all this money, again, these $250 million pay packages. uh, he must think it's in sight. Well, he just said it. He thinks AI superintelligence is in sight. So if you think AI is coming for jobs right now, boy, we have AI superintelligence. It's going to come for your job, my job, everybody's job. And yeah, the world can profoundly change. So, anyways, Meta's report, massive mic drop moment for AI. Meta stock, that's a long-term winner that you're going to want to stick with.
Yeah, man. It really begs the question: if nobody's working, what's actually happening?
Yeah, I don't think it's going to end up in a world where nobody's working. Again, it's going to be you put it correctly. What was the term you used? A technocratic oligarch or something like
Right.
that. What was the term you used?
Technocratic oligarchy. Yeah.
Yeah, technocratic oligarchy. That's exactly what it's going to be. You have fictional numbers here. You have 100 companies in the insurance industry. Five of them are going to figure out how to use AI to do insurance better than everybody else. 95 are going to go out of business. Those five are going to aggregate all of the value. A lot of the employees that get fired, the other ones are going to go and work for these companies. That's how it's going to shake out. Okay.
Right.
That's going to happen across every single industry. And then within companies themselves, you have 100 employees in one of these AI disruptors like Lemonade. Okay, they upper 50%, upper 60%, maybe upper 80% that figure out how to use AI effectively to do their jobs better and get more done and be a better worker overall. They're gonna get big raises, and they're gonna have more stock options, and they're gonna become very wealthy through the growth of their company. And the bottom 20% are gonna get cut, and then they're gonna be unemployed. So that's how it's gonna play out. It's not a world where nobody's working, but it's a world where things split. And if, let's call it upper 80, lower 20, if you're in the upper 80, there's a potential to make a lot of money. If you're in the lower 20, well, you're
Well,
SOL.
yep. All right, let's rapid fire through a couple more of these stocks. We got Microsoft.
Microsoft, great report, double beat and raise report, hiked the CapEx guide, or got a big CapEx guide. Revenues plus 17%, best since early 2024. Azure, which is the cloud business, the important part of the company, revenue's up 39%. That's the best since the summer of 2022. Fantastic growth there. Operating margins up 200 basis points, EPS up 24%. Important, remember Palantir said, hey, we've grown our revenues by 88% over the last 2 years, while headcount's only up 12%. We'll look over here at Microsoft. Revenues up 17% year over year in the quarter. Headcount flat. Didn't hire any more people. Grew revenues by 17%. It's happening everywhere, folks. It's happening everywhere. They now have 400 data centers across 70 regions. That's more than anyone else. I think their cloud business is really, really strong, really very much intact. From GitHub Copilot to any of their Copilot apps, a Microsoft Fabric, that's their AI data platform, Dragon Copilot, that's the healthcare one. All of these are seeing great adoption, a lot of uptake in usage. So the growth story there is firing on all cylinders, kind of like Meta. I throw it in the bucket of continued big tech winners. No reason to sell the stock, no reason to get rid of it. It should be a core tenet of every portfolio for the next several years, in my opinion. So I really do like Microsoft stock. It's really proven out the AI bull thesis there.
Gotcha. And then up next, Amazon.
So Amazon was surprisingly weak on their quarterly earnings report. AWS is not catching fire like Google Cloud and Azure are. AWS, to be sure, is the biggest cloud player in the game, but Google Cloud is growing at 32% and accelerating growth. Azure, 39%, we just talked about it, accelerating growth. But AWS is down at 17% and not accelerating growth. So they're clearly losing market share. That's not great because who's winning market share right now is the companies that are better at AI. And if you're losing market share, it means you're not as good as AI. So definitely Amazon's a little bit behind on AI, but they're so big with so many resources. Management knows exactly what they need to do to better equip AWS with AI offerings. I think they're going to go ahead and do those things. I think AWS is going to punch back. AWS is in a solid position. Meanwhile, the retail business at Amazon absolutely firing on all cylinders. Consumer spending remains stable. That stuff's all great. But the real big story is profit margin expansion. They're leveraging robotics. They're leveraging AI. I think we talked about it on this podcast a few weeks ago. Amazon just deployed its millionth robot in its warehouses. They are effectively using all those robots to reduce costs, increase throughput, which is leading to higher revenues and higher profit margins and bigger profits for the retail business. So the retail business at Amazon is on fire. AWS is going to punch back. I think that stock is also another long-term big tech winner. No need to sell it. No need to get rid of it. Buy it on dips and stick with it for the long run.
Got it. And then another big guy, Apple.
Apple. So the iPhone business is bouncing back nicely. It's the new cheap model, the iPhone 16e. I think it costs, what did it cost? $599 or something like that. That model is really popular. iPhone revenue rose 13% this quarter. That's the best since the summer of 2021. So the best in 4 years, iPhone revenue growth. Meanwhile, the services business, which is really the important part of it, 13% revenue growth. Best since summer of 2024. So nice, good growth there. Overall revenue is up 10%, the best since late 2021. So the Apple growth narrative is starting to really gain some momentum because of that low-cost iPhone. Now, I don't think that low-cost iPhone is going to drive growth forever. They're going to have to do something big on AI to really unlock the next leg of growth here. But I think they're going to do something big on AI. And I think what that something big is an acquisition. On the conference call, CEO Tim Cook talked about they're going to double down on AI investments. They're going to increase AI spending. They're going to really try and do something big in AI. And then later in the call, in the Q&A, he was asked, "Hey, are you open to M&A? Like, what are your thoughts on like maybe acquiring an AI startup?" And he said, "We are open to M&A that accelerates our roadmap." So he spends the whole conference call talking about how they want to spend more on AI. They're going to go big on AI. And then at the end of the call, he says, "We're open to M&A to accelerate our roadmap," which basically means we're open to M&A to accelerate our AI strategy, which we want to spend a lot more money on. Every other big dog in the space kind of has their horse in the AI startup race, right? Microsoft has OpenAI, Alphabet has Anthropic, Amazon has Hugging Face. Every other big company out there has made a big splashy either acquisition. Meta has Scale AI, either a big splashy acquisition or poured a lot of money into a big AI investment outside of Apple. Apple has not. They are uniquely not a part of that. I don't think that will remain true for much longer. I think they understand that their internal AI efforts have been poor, that progress has been slow, that Apple Intelligence has been mostly a dud so far, and that if they want to succeed long term, they're going to need to play some serious catch up in the AI race. What's the best way to catch up if your internal efforts are sucking? Go external. Go acquire somebody whose efforts in AI are not sucking, are actually really, really good. So I think that Apple is going to make a big splashy either investment or acquisition in the AI space. That's going to accelerate their AI roadmap. That's going to make Apple Intelligence real kick-ass. And that's going to send Apple stock up a lot in the long run. I still believe in this company. I think it's going to be one of the best AI players in the long run. I like the stock. I think this acquisition is going to be the key to really accelerating the growth. I don't know who they're going to make a play for. I have a few suspicions. But I think if they make the right play, that could be a real game-changing moment for Apple.
Got it. Yeah, and Apple typically does not get left behind too much, right?
No, they do not. They do not. They have the money, the resources, the talent, the data, the distribution to do whatever the heck they want to do. And so now they want to do something big in AI. They're going to do something big in AI. Mark my words.
Definitely. Okay. I want to move on to some chip makers here. One based in your hometown of San Diego, Qualcomm.
Yeah, Qualcomm, not a great report, but I continue to really like this company because physical AI. AI is going to go to the edge. AI is going to go to devices. AI is going to go into robots. AI is going to go into self-driving cars. AI is going to go into AI glasses. AI is going to go into all these things. And I think that this proliferation of physical AI devices is going to require, or is going to create massive demand for Qualcomm Snapdragon chips. So I think how I look at Qualcomm right now is I think it's the next Oracle, the next IBM. That those were legacy tech giants that were big winners in the dot-com boom, and then went absolutely nowhere for a long time. And then they've suddenly woken up in the AI boom, right? Oracle woke up with its data center stuff, and IBM woke up with its AI software starting to re-accelerate growth. And those stocks have made huge huge moves. They were sleeping giants that woke up and had these big rallies. I think Qualcomm's next. Qualcomm to me is a sleeping giant with a chip, the Snapdragon processor, that's at the epicenter of the physical AI revolution. So as that physical AI revolution really wakes up and physical AI devices really proliferate over the next 1 to 2 years, I think Qualcomm has an IBM moment, Qualcomm has an Oracle moment, and that stock absolutely soars. So that's one of my preferred AI plays at the moment because I do think that it's just a few quarters away from a real big move higher.
Got it. Okay. And then another chip maker that had not so great report, ARM.
Yeah, ARM didn't have a great report. Which is surprising given how much AI infrastructure spending is going on. But I continue to believe that there is going to be an expansion of XPU architecture or from chip architecture from GPUs to XPUs. I think the full stack GPU game is still going to remain strong, but I think it's going to decrease in market share as XPU architectures gain steam. We've talked about this with physical AI. We've talked about this with SLMs, and I think with just task specific stuff, as Meta, Microsoft, Amazon, all these companies create more task specific AI that's going to require more modular chip architecture, custom ASICs, and things like that. ARM is a big player in that. I think short term weakness in that stock should be bought. I continue to view it as a trusted partner for big tech companies to create custom
Mhm.
silicon, and that's going to create long term growth for the company and the stock.
Right, right, right. Yeah, I mean, the future is going to be robots and AI. So I mean, why wouldn't it grow?
There you go. There you go.
Okay. And then moving on to some more financial stocks, we got Robinhood. They had an excellent report. What do you make of that?
Robinhood's one of my favorite stocks at the moment. I just think that there's a retail trading frenzy that is coming back. It's coming back to life.
Hmm.
Wall Street bets is starting to get some energy, like it's 2021 all over again. I do think the market's going to improve. I think market sentiment's going to improve. I think price action is going to improve. I think you're going to get retail traders coming back into the game in droves. Not as much as 2020, but something similar to those levels. Robinhood's going to see a lot more users on its platform. You're going to see accounts grow. They're going to be a lot more active on it. And so I think Robinhood is just a great play for kind of the risk on environment I think we're going into over the next 6 to 12 months. The company did just report fantastic earnings. Monthly active users up 8%, assets up 99%, revenues up 45%, EBITDA up 82%. Great growth numbers across the board. I don't see that slowing down anytime soon. The stock's been on a heater. I think it stays on a heater so long as this bull market is alive and well, and I think it will remain alive and well again for at least the next 6 to 12 months, if not a little bit longer. So I have a stamp of approval for Robinhood stock.
Awesome. Okay. And then a company I like to think of as Robinhood's cousin, Coinbase. They seems like they missed a little bit. What do you make of that?
Yeah, so you would think that, Robinhood puts up these great numbers. You would think that Coinbase would also put up these great numbers, but they didn't. I mean, Coinbase's numbers were actually pretty ugly. Let me look at them. Yeah, so users not that bad, up 6%. Robinhood was up 8%, but volumes only up 5%. Revenues only up 3%. Robinhood just put up 45% revenue growth, and Coinbase is putting up 3% revenue growth. EBITDA, Robinhood put up 82% growth. EBITDA at Coinbase actually shrunk 14%. EBITDA minus 14% year over year. These are really sluggish numbers, and it kind of confirms to me that, hey, you know what? If you're trading stocks and you're trading Bitcoin,
Hmm.
you're going to Robinhood. Maybe you're going to SoFi,
Right.
but you're not going to Coinbase just to trade Bitcoin. You're going to Coinbase to trade altcoins. Now, altcoins have been lagging Bitcoin. We've talked about this multiple times in previous podcasts. That lagging of altcoins, I believe, is why Coinbase's numbers are so weak relative to Robinhood's numbers. You would think, okay, Bitcoin's hot, record highs, Coinbase puts up record numbers, but they don't because Coinbase is not a play on Bitcoin. Coinbase is a play on altcoins. Coinbase usage goes up when everybody's FOMOing into altcoins. That's not happening right now. Will it happen? If it does, Coinbase stock is a buy. If it doesn't, Coinbase stock is a sell. I think it does happen. I think the altcoin season is coming. I think there will be a moment, 6 to 12 months, where retail traders are FOMOing into altcoins. Coinbase usage is going to soar. Coinbase stock is going to soar. So I like Coinbase stock, but on the thesis that altcoins are going to have a massive rally over the next 6 to 12 months. If you do not believe that, then you should not own Coinbase, even if you believe that Bitcoin is going to do well. Because clearly, as these numbers show, Bitcoin doing well is not enough for Coinbase stock. It's enough for SoFi, it's enough for Robinhood, but it's not enough for Coinbase. You need the altcoin. So if you believe altcoins are going to play catch up, buy Coinbase stock. If you don't, stay away from Coinbase stock.
Got it. Yeah, it is really interesting to see that you would one would assume it would be a repeat of that last cycle where we saw a bunch of altcoin booms, but would you say it's because of institutional investors not really investing into altcoins but investing into Bitcoin that we're not seeing that?
Yeah, I think so institutional money is only going into Bitcoin. It's not going to altcoins.
Yeah.
That's definitely part of it. But I think people just got burned
Mm,
really, really badly in the last altcoin super cycle.
yeah.
And they're really hesitant to get back in. Like it's just you have to have sentiment improve meaningfully to levels that are super, super high before I think you see people really FOMO back into altcoins. The scars are pretty deep. So I think that's really what's going on. Deep scars are preventing altcoins from really having their moment. Also, a lot of these altcoin projects that were really hyped up back in 2021 didn't end up doing anything. And now here we are 4 or 5 years later, and you're like, you still haven't done anything. Like, is there really
Right.
any fundamental value there? So that's why I think when altcoin season does arrive, I do think it's coming. I think it's going to be anchored around tokenization and stable coins because those are where we actually are seeing some real world progress. Stable coins definitely are proliferating across the global economy. You are seeing major retailers consider stablecoin issuance as actually
Yeah.
even issue their own stablecoin. So that's definitely there's real world progress there. And tokenization too. SoFi is doing tokenized equities. Robinhood is doing tokenized equities. So it feels like yes, there is actually some movement on the tokenization front. So if and when altcoin season does arrive, I think the real winners are going to be anchored around tokenization and stable coins. But that should be enough again to get Coinbase stock rolling again, in my opinion.
Got it. Yeah, tokenization in major companies, another step towards that technocratic oligarchy, right?
Yeah, there you go. Exactly.
Next up, we have a company you've mentioned before, Luke. I know you like it. We got Aurora, the self-driving truck company.
Yeah, Aurora put up a really impressive quarterly business update. This company, I've long viewed them as the undisputed leader in autonomous trucking. The business update they provided last week, in my opinion, confirms that they are the undisputed leader in autonomous trucking. With the competition so far behind, you may as well just say there is no
Right.
competition. Um, they launched commercial operations 3 months ago in Texas, that Houston Dallas route. Since then, they've driven over 20,000 driverless miles on that route. So that's big. That's big time. They started doing nighttime driving. They've started testing in inclement weather. That testing is going to be done by the end of the year. They have pilot runs going between Fort Worth and Phoenix. They expect to have completely autonomous runs on that route by the end of the year. They're now up to 3 trucks operating between that Dallas and Houston route. They expect to get the tens of trucks on that route as well as the Phoenix Fort Worth route by early next year. Um, Pretty amazing. And with all this scaling, mind you, they're scaling rapidly. They went from, one little truck doing a route every once in a while. Now they got 3 trucks always running, getting up to tens trucks always running, expanding routes. Through all this expansion, they've maintained essentially or close to a 100% safety rating and a 100% on-time performance rating. So as they scale, still no issues. I love the company. I think it's a massive long-term winner in autonomous trucking. I think they're going to be the backbone of the U.S. trucking industry within 5 to 10 years. The stock's valuation does not reflect that. I think this one's going to be a 10x winner over the next few years.
Phenomenal. All right, another AI company we talked about at the top of this podcast, we got Palantir, which I think in 2025 alone has gone up 100%.
Oh, good old Palantir, Alex Karp. We talked about him, but mostly from the AI jobs apocalypse point of view. Let's talk about it from a numbers perspective. Got the numbers right here. The report was fantastic. I mean,
Yeah.
blew the estimates out of the water and literally jaw dropping the strong growth rates. Here are those growth rates. Revenues up 48% year over year. Government revenues up 49%. Commercial revenues up 47%. Quarterly revenues have now surpassed $1 billion for the first time ever. Just 3 years ago, quarterly revenues were under $400 million. Now we're over $1 billion. So rapid compounded growth at scale for this company. Here's the better part. That 48% revenue growth is the company's best in its history as a publicly traded company, and that record won't last long because the guided growth rate for Q3 is 50% revenue growth. So they just set a record for best revenue growth in history, and now they're going to break it again next quarter. This growth story is progressing exponentially. The size, the speed and the size of this movement is tremendous. And then because of all the things we're talking about, 88% growth in revenues, only 12% growth in headcount. Karp wants to increase revenues by 1,000% while decreasing headcount by 12%. Because they're unlocking all those efficiencies, will operating margins increase 900 basis points in the quarter. EBITDA up 80%, operating profit up 83%. The Q3 guide calls for 79% operating profit growth next quarter. The implied Q4 guide calls for 52% operating growth in that quarter, which means that Palantir is going to be exiting 2025 as a 40% plus revenue grower and a 50% plus operating profit grower. It's unreal the things this company is doing with AI. I've always called them the Microsoft AI. I think their AIP is going to become the new Excel, the new Microsoft Word, the new Microsoft Office suite of products. As AI becomes the standard ubiquitous technology in enterprises, as it becomes what we all use to do our work, I think AIP is going to be the platform upon which we do that work. So this to me is the Microsoft of AI. And I think that they're proving it with the numbers. So Palantir stock, it's massively, super richly valued now. What's the multiple on it? I don't know. Big multiple. We don't even need to talk about how big the multiple is. It's super richly valued. If you care about the multiple, it's not the right stock for you. But I do think at a $400 billion market cap or approaching $400 billion market cap that there's still upside because of its potential to become an embedded ubiquity at the enterprise layer. And that to me is worth probably $1 trillion, if not more. Look at Microsoft. And so I don't think the growth story is done at a $400 billion market cap. I think there's still runway left. There's going to be choppiness because of how rich the valuation is. But I do think this remains a very good long-term play on AI.
Nice. Okay. And then last but not least, we got Reddit. It's a stock you actually recommended to your subscribers. What did you think about their report?
Reddit's the best growth story in social media, man. We recommended the stock on the idea, as we said to our subscribers, hey, this is the best growth story in social media. They have a really sticky platform with a really sticky user base. People love it. The content they generate on that platform, their users generate on that platform is super unique. You're not going to find that anywhere else.
Mm-hmm.
They're just starting monetization efforts of that platform. And because the content is so unique and the subscriber base is so sticky, advertisers are going to want to get in on that growth. They want to get in on that monetization engine. And indeed, we're seeing that. Let me pull up the numbers here. So daily active users up 21% in the quarter. Again, sticky user base. ARPU, this is that monetization engine growing, average revenue per user, up 47% year over year to $4.53. Revenues up 78%, best ever as a public company. The Q3 guide calls for 55% growth next quarter. EBITDA up 320%. 2%. I mean, this is a massive, massive, massive growth story right now. And I don't think it slows down. Again, really sticky platform, really sticky user base, really unique content. Why would advertisers not want to plug into that? $4.50, that's not a high ARPU. You look at something like Facebook and you're basically approaching a $15 ARPU. So we're at 4. The best in class is 15 to 20. I think Reddit can get to that. I think we at least get to double digits. So as we go from $4 ARPU to $10 ARPU, I think the growth story here remains vigorous. The stock's really not that expensively valued. 40 times forward EBITDA for what I
Mm.
see is probably at least a 30% compounded EBITDA grower, if not more than that over the next few years. I think it's still got a lot of upside left. I like Reddit.
Amazing. Okay, we got a bunch of explosive. Um, so what is the general takeaway here? Do we think that all of these reports, these positive numbers and earnings, are enough to move the needle on price action? It seems like it's been pretty stagnant for a little while.
Yeah, I mean, the takeaway in these earnings reports is twofold. One, AI is taking over the world, and if you're doing something in
Mm.
AI or around AI, you're reporting great numbers, and if you're not reporting great numbers. And if you're reporting great numbers, your stock's going higher, and if you're not reporting great numbers, your stock's going lower. So that's kind of an internal tug of war that's going on in the market right now. Is AI stocks are ripping higher on great earnings and great reports and fantastic growth, and other stocks are not because tariffs are indeed kind of slowing the economy. Consumer spending is stable, but not exactly accelerating higher. Business investment has been largely paused. So there's a lot of uncertainty out there, and you're seeing that show up on a lot of the other earnings reports we didn't talk about today, the ugly ones, because those are outside of the world of AI. We talked about AI, so everything we talked about was pretty because things in AI right now are really pretty. So that's one big headline takeaway. Again, the bifurcation of the market of the economy. But the other big takeaway is that you're getting a tug of war on Wall Street between this really good AI data and again sluggish macro data. Bad jobs report, bad ISM, July menu or services report. You don't have great economic data right now, and so that's creating a conflicting picture on Wall Street. Where I land in that conflict in that tug of war, AI all day, every day. Okay. I don't care about the jobs numbers. I don't care about inflation. I
Mhm.
don't care about that stuff. AI is such a massive technological transformation, societal transformation, economic transformation, transformation of everything that it's going to override job weakness. It's going to override, a little bit of inflation here or there. It's going to override all these other things. It's going to override geopolitics. It's going to override the firing of BLS chief. It's going to override Trump sending nuclear submarines somewhere near Russia or whatever the heck happened over there. It's going to
Right.
override bombings in Ukraine, in Iran. Like it's going to override all that stuff. Right now, what you have is you have this massive AI growth story versus a lot of crap to worry about. And all that crap to worry about is being completely trounced by the AI growth story, as it should be. The big picture is the world's biggest, most important, most powerful, most influential companies are committing to spend hundreds of billions of dollars, over $500 billion in combined capex, on the continued build out of AI infrastructure, continued development of AI models, continued proliferation of AI products and services. That's the story that matters, not a weak jobs report, not a hot inflation report, not, BLS chief firing, not all the stuff that the nightly news loves to talk about and which grabs attention, all that crap people on TikTok and Instagram love to debate about. That stuff is all a sideshow. It's all a sideshow. The main show, the only thing that really matters on Wall Street, and the only thing you should really care about as an investor, as a worker, as anybody living in this world right now, is the massive AI growth story and what that means, well, for everything, for absolutely everything. So that's my takeaway on this earnings season. It just reinforces my beliefs that, hey, AI is changing everything regardless of everything else. And you need to be plugged into that story by being plugged into AI stocks, by being plugged into how to use AI to make you more efficient at your job, by being plugged into how to use AI to transform the way you learn things, transform the way you do things, transform the way you take care of things, et cetera, et cetera. That's the takeaway.
Amazing. Yeah. Now I want to round out our market section by just coming back to Bitcoin. It seems like it's dropped down to about 110K. What's your outlook for the remainder of the year on Bitcoin specifically?
I think Bitcoin again. I got 150 or 200 by the end of the year. I think things would be fine there. Those macroeconomic jitters we've been talking about, the AI growth story versus everything else. Everything else has been weighing on Bitcoin because it doesn't really have an AI story to it. There are some AI elements underneath Bitcoin, within the altcoin market. There are some AI stories there, but nothing really all that powerful. Notice
Mhm.
how I said when it comes to the altcoin season, I want to be anchored around tokenization and stablecoins, not AI. So I think the AI growth story in cryptos is, I'm not going to call it like a fugazi, fairy dust, but I will say it's not as tangible and legitimate as the AI growth story in stocks. So
Mm.
I think tokenization and stablecoins are the growth stories there, the growth narratives there. To me, those both remain pretty strong. I think macroeconomic weakness is weighing on Bitcoin and other cryptos, but I think that at the end of the day, that macro weakness does fade. When it does fade, Bitcoin bounces back. I think again we go to 150 to 200 by the end of the year.
Got it. Okay. Now, with that, do want to move into our tech section. I want to pick it off with talking about something we talked about a little bit last week. It is the conversion from large language models to single language models, or essentially the tightening up or specificity of AI language models. I think I, understand it on a general level, but what we want to do is maybe get your opinion, Luke, on what stocks we can see tangibly affected by that shift.
Yeah, so I think the LLM to SLM shift is it's probably the most important sub narrative in the AI world right now. And I think that what it's going to do is, again, you have this massive AI growth story with hundreds of billions of dollars being poured into more or less the expansion of AI infrastructure. What the LLM to SLM shift is going to do is that in the last 2 years, 99.9% of that spend went into the stuff that supports LLMs. The LLM to SLM shift means that over the next 2 years, maybe 20 to 25% of that spend goes towards stuff that supports SLMs, which means the stuff that supports SLMs could see some pretty big growth. Now, I have a chart that I want to pull up that kind of encapsulates some of this growth. Can't find the chart right now, but we can just kind of go over some of the stuff that I think a name like there's really five levels to it. Okay, there's going to be the compute level, there's going to be the cooling level, the networking level, the optics level, and the power level. I
Mm.
think that's how you kind of look at chip architecture. Those are the five layers of chip architecture where value is created, where value is added. At the compute layer, right now, it's all about NVIDIA, right? But I think that shifts towards companies like Lattice Semiconductor, towards companies like Qualcomm, towards companies like Ambarella, towards companies like ST Micro, ticker STM. Those companies are better designed for modular compute, better designed for compute on the edge. I think those are stocks that could start to win in this shift. Moving down to the cooling layer, right now it's all about Vertiv. VRT is the ticker. They provide these massive cooling solutions for big old data centers. But as we kind of shift away from big old data centers to compute at the edge, you want to find cooling solutions that are very miniaturized, that can cool at the edge, that can create power systems or cooling systems that live on the edge. These kind of small power systems, small cooling systems. I think that's Vicker, ticker VICR. That's a company that I've been looking into for this shift. Sensata Technologies, ticker ST, Eaton, ticker ETN. I think those are companies that could have a lot of success at the cooling level of the LLM to SLM shift. Moving one layer deeper to the networking level. Right now, networking, Broadcom, uh, uh, Marvel, Arista Networks. That's the networking in the data centers. As we go to SLMs, it goes to the edge. I think a lot of networking starts getting done, obviously, at the edge. It's communication between chips. I think companies like MaxLinear are really well suited for this shift. Sierra Wireless, Lantronix, Semtech, SMTC. These are companies that are really well suited for the shift at the networking layer of the LLM to SLM transition because they're better at edge networking, and according to my research.
Mhm.
One layer deeper, layer 4 here, you have the optics layer. At the optics layer right now, it's all about Coherent, a name that we've owned in our model portfolios for a while. It's been a big winner for us. Lumentum, Intel, those are kind of real big players at the optics level. I think that shifts a little bit towards Teledyne, ticker TDY, Tower Semi, ticker TSEM, HIMAX, ticker HIMX. Those are companies that I think win in this shift at the optics layer. And the last layer of the LLM to SLM shift, you got Palo. Right now, big data centers, big power hubs. You have companies like Generac, Bloom Energy. We've talked about it before. Big winner
Yeah.
here. I think that shifts a little bit more towards a company like Vicar. We've talked about them before. VICR, Allegro Microsystems, ALGM, also kind of miniaturized power for the edge. So that's sort of the shift when we talk about specific stocks. Yeah, specific stocks that could benefit in this big shift. Now, that's not to say that the LLM names like Nvidia, like Veritiv, like Broadcom are going to no longer have growth. Like I said, this whole pie is growing. All the LLM to SLM shift means is that as opposed to 100% of the money going towards LLM stuff, now 80% goes towards LLM stuff and 20% goes towards SLM stuff. That doesn't mean the LLM stuff is going to drop. I think the LLM stuff is going to stay strong. What it means is that the SLM stuff, which before was not getting a lot of money, will now get a ton of money, and the stocks behind the SLM trend, again, names like Lattice Semiconductor, Qualcomm, Vickr, Semtech, MaxLinear, Tower Semi, Teledyne. Those are names that could be really big winners in the physical AI, SLM, AI boom that I think is coming in 26 and 27.
Awesome. Yeah, I mean, if you could send that table over, maybe we could throw that on screen so people could see it as
For
you're
sure.
talking
Absolutely.
about it.
Yes.
Cool. Now, moving on to the next bit of information here. Palo Alto Networks is acquiring CyberArk software in a massive $25 billion deal that will make some massive AI-powered cybersecurity firm. So, what do you think of this deal? The AI and cybersecurity, like how is this going to affect the future?
Very positively. I think the Palo Alto Networks super company now is going to be very, very strong. I think they're very well equipped to become the leader in AI cyber. I think AI cyber is going to be a huge space. The reality is AI is transforming every part of the economy. That includes the negative parts. So hackers now have access to AI tools to better
Mhm.
get into systems, better penetrate digital systems. That's going to require a rethink of the architecture defending those systems. So we're going to have to use AI to defend against AI. So AI defense against AI attacks. That's going to cause a massive upgrade cycle throughout all cyber. So all these companies that are paying for these traditional cybersecurity systems, now they got to upgrade, pay more for the AI version of it so that they don't get attacked by AI hackers. There's going to be a huge growth cycle for all companies in cyber AI. I think now Palo Alto plus cyber, boom, that creates the number one company in the space. So that's where I put my money. I think that's a fantastic bet. But look for more acquisitions. Sentinel One, ticker S, is a smaller player in the space. They probably get acquired, I think. You have other names out there, CrowdStrike. These are names that are going to be steady long-term winners. Cloudflare, ticker NET. These are names that, in my opinion, they're going to be steady long-term winners. I don't think you're going to rattle off 200, 300% gains on these names in a year, but I think they are steady winners that'll continue to give you 30 to 40% per year, maybe 20 to 30% per year. But they're going to be great bets for the long run because of the increasing importance of AI in cyber and how it's going to create this massive upgrade sales cycle over the next probably 3 to 5 years. There's a lot of runway behind that.
Definitely that ever increasing halo of AI, if you will.
That is correct. That is 100% correct.
Okay. All right, and that's last but not least, we've got a little bit of eVTOL talk. So L4 Harris, let me know if I'm saying that right, just tapped Joby Aviation,
Mhm.
and they want to start exploring eVTOLs in military use. Now, will that dramatically increase the TAM, that total addressable market for eVTOLs? Is that just a extremely positive outlook for eVTOLs in general? What do you think, Luke?
Yeah, I mean, so if we can get eVTOLs in the military, I mean, Joby's addressable market goes up dramatically. Now, Joby also just acquired Blade, which was a competitor in the space,
Mhm.
ticker BLDE. So there's definitely industry consolidation happening right now in the eVTOL space, and uh, that's how these tech megatrends play out, right? You get a new tech trend. You get a bunch of companies coming into the space, a bunch of startups all thinking they're going to change the world. They all develop prototypes. Then once those prototypes start actually getting into the world and doing things, which is what's happening in the VTOL space right now, then the industry consolidates around a few winners. The big dogs take out the small dogs, and the big dogs carry the torch on to the commercialization phase. And that's what's happening right now in eVTOLs. eVTOLs this year, we started to have pilot operations in the Middle East. We're going to have commercial operations later this year, early next year. So we're entering the commercialization phase. Now you're getting the consolidation ahead of that commercialization phase. Joby acquiring Blade. I wouldn't be surprised if there's a lot of other smaller ones out there. Eve, they get acquired by maybe Archer. There's going to be a lot of consolidation that happens. And I think Archer and Joby are going to be the two companies that are the consolidators that end up carrying the torch into and throughout the commercialization era. So we got the chart of Joby right here. It's gone straight line up. This was a $4 stock not too long ago. Now we're basically a $20 stock, $19.11 right now. This one to me is a stock that will keep on pushing higher because it is a consolidator in an industry that will grow rapidly over the next few years. The bull thesis initially was just about passenger transportation. If we can get military applications here too, then all of a sudden this looks like a, dare I say, a Palantir, where Palantir has its commercial business and its government business. Both are growing basically 50% year over year right now. And the stock has gone from, well, I think it was a $6 stock at one point in time, and now it's what, nearly a $200 stock. So could Joby follow a similar path? Yes. It'll never be as big as Palantir. That's software that could become a ubiquity. eVTOLs will never become a ubiquity on the commercial side. But is there massive growth potential for it in commercial and in government? Yes. So this could be like an eVTOL version of Palantir, so a scaled down, much
Yeah,
smaller version. But the growth potential is there, absolutely.
100%. Yeah, I think if I'm not mistaken, the military budget in the states alone is probably a trillion, if not close, very close to it.
Yeah, I mean, the reality is that when you get companies that can be powered by growth in both the commercial and the government sectors, that's a company like Axon, that's a company like
Yeah,
Palantir. These are huge success stories, right? Could Joby be the next? Yeah, it could. It really could.
amazing. Okay. Now I do want to move on to our exponential stock section, Luke. First off, company we did just talk about their report, Reddit.
Yeah, like I said, I really like this stock. I think it's a winner. Let me pull up the chart for you. We talked about the fundamentals on it, so let's look at this now from a technical perspective. Because technically, I don't think it's that extended. We had a massive rally earlier this year, and then a huge pullback around that trade war stuff. And now we're just recovering. So we are 83 on the RSI. So short term, maybe a little overbought. But I mean, if you really look at this chart, what I'm seeing is a stock that is just getting back to where it was. And if this channel persists, I don't see any reason why we don't take out this previous high right around 225 bucks. So we're at 203 right now. I think we go to 225. I think we do slow down at 225, but I don't think we slow down until we get to 225. Again, fundamentally, I love this stock long term. Technically, in the short term, I think there's runway from 200 to 225.
Just for my curiosity, why would a stock like Reddit get affected by a trade war pullback? Is that just general market?
Advertising budgets.
Uh,
People aren't going to advertise if there's a trade war that's impacting the global economy and there's business uncertainty and consumers aren't spending, then people aren't advertising, right? If
right.
I'm a company and I'm selling a product, I advertise when people are buying my product. If people are not buying my product, I'm not advertising. So you saw ad sensitive names like Reddit really get hit in the trade war because the fear was that was going to freeze consumer
Mhm.
spending, which would lead to lower ad budgets, which would lead to less revenue for Reddit. Now that's not happening because consumer spending has proven stable. Now it's
Yep.
re-strengthening as we kind of shake off the trade war shock, and ad budgets are remaining very healthy. Meta, Alphabet, Reddit, they all reported great ad growth numbers. So that's sort of why the sell off and why the rebound.
Gotcha. Okay. Very fascinating. All right. Next up, we got Appfolio.
Oh, I like this one. Appfolio is a strong company. We've actually owned this one for a long time in our model portfolios. You can see it's been a big winner for a while. So what they basically do is they provide software that allows companies that own rental units to more effectively manage those units with
Mhm.
software. And they're getting new AI stuff in there too, allowing rental owners to family property owners to more effectively manage their stuff with artificial intelligence. The growth here is very, very attractive. Let me get the numbers because they were a company that we do cover, and so we do have their number. But here we are. Yes, latest had a double beat and raise report. Revenues were up 19%. Second half of 25, they're guiding for 19% revenue growth. So steady and high, right around 20%. It's a 20% compounded grower. EPS plus 23%. I don't see any reason that's going to change. If the housing market does kind of or kind of thaws over the next few quarters because of lower rates, which I think is entirely possible. I think that helps out Appfolio. I also think that the new AI products will drive increased growth. So fundamentally, I think the stock's in a great position. Technically, we just got a bit too extended. I mean, that RSI jumped up to what was it? 87. So now we're having a little bit of a pullback. Okay, great. But what I like about this is it looks like the start of a stage two breakout to me.
Right.
So we had a big breakout here from late 2022 until July of 24. But since summer 24, we've kind of flatlined, as best evidenced by all the moving averages kind of starting to smash together. The 200-day moving average fell flat. The slope went flat. But now with this big jump higher, you see this was major resistance on the stock. It was this level, this $270 level. That's where we topped out in summer 24, hit our head there in December 24, got rejected. It looked like we were going to get rejected again here, but then boom, we just blasted through it. And because we blasted through it, now look at the MAs. 50 starting to curl higher, 100 starting to curl higher, 200 starting to curl higher. I love this action when flattish moving averages all start to turn higher. That tells me a stage one or stage four consolidation pattern is turning into a stage two breakout. So I think this is a breakout stock. After it kind of retreats a little bit, lets that RSI cool off a little, I think the stock does go higher.
Awesome. Okay. All right. Next up, we got probably my little sister's favorite stock. She's been ordering it weekly for a couple of weeks now. Wingstop.
Good old Wingstops. Remember when I said don't get out of AI? Or I mean, like just stay all in with artificial
With
intelligence, and
AI.
every time
Yep.
I try to get out of it, it hasn't worked out. Well, this is becoming an AI story. Okay, Wingstop. What's it called? Let me look it up. They have their new. What is it? Wingstop AI kitchens. What are they calling them? They have a name for them. Smart Kitchen.
Mm.
Wingstop Smart Kitchen. So one of our favorite stocks back in the day was a company called Sweet Green. Now, Sweet Green was, I love their salads. I hate salads, but I'll eat salads from Sweet Green, so that tells you the salads are good. Um, Anyways, Sweet Green, love the restaurant, great food chain. One of the reasons we like the stock is because they had their smart kitchens that were using AI and robotics to essentially make salads. And that was creating a big boost in productivity, increase in throughput, decrease in costs, higher profit margins, et cetera, et cetera. So each unit that had one of these smart kitchens was doing more sales at lower costs with higher margins, bigger profits. Just a win, 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 win. Wins across the board. Okay, well now Wingstop is doing that. And Wingstop has their smart kitchen stuff. It's seen a 40% reduction in ticket times within 4 weeks of implementation. So they implement the smart kitchen, which uses AI and robotics and software and all this fancy new stuff. And 4 weeks later, boom, 40% reduction in ticket times. Cost also going down. Profit margins at those restaurants are moving higher. So they had a great earnings report, and the stock looks like it's starting to climb, right? We had that big rally into summer, and then boom, had a bit of a sell off, but bottomed just below the 200 day, right at the 100 day. Big bounce. You're seeing the MA start to curl higher. I think this stock does go higher from here. It is becoming what I call an AI applier. It is a legacy business that is using AI to dominate the rest of the industry. Remember, I told you that's how AI is going to transform industries. You have 100 people, 100 companies selling insurance. The 5 that use AI are going to dominate the entire industry, aggregate all the value, and the 95 that don't are going to go out of business. Same in the restaurant industry. You have all of these restaurant operators, the chains, the restaurant companies that use AI, integrate robotics to improve the quality of their food, improve their menus, improve how quickly it takes to prepare the food, decrease cost. The restaurant operators that do that are going to aggregate all the value of the restaurant industry. People are going to still buy food, but they're going to increasingly go to the restaurants and use AI to deliver a better experience at a lower cost. Wingstop is becoming that. Sweet Green is that. Wingstop is becoming that. Chipotle, God save them. I hope they do it. But they're struggling to do it. McDonald's is also struggling to do it. So we'll see who wins the restaurant wars in terms of AI. But right now, it looks like Wingstop could become one of those firms.
Yeah, cutting wait times almost in half is pretty insane.
Yeah, pretty wild, right?
Yeah. Okay. Next up, we got Workiva. Is that right? WK stock symbol.
Workiva. I call this my IPO play.
Hmm.
Because what Workiva is I mean they do a lot of things, but a big part of their software offering is S1 preparings. So when a company prepares to go public and they have all these S1s and whatnot, and they got to do S1 and then the amendment to the S1 and then the second amendment to the S1 and the third amendment to the S1. If you go to the SEC filings of a company that's about to go public, there's like you'll see a bunch of documents. There's the S1 and then S1-A, S1 and this was all the way down. So, anyways, there's a lot of filings that go into going public, right? Workiva helps companies prepare those filings. So when the IPO market is red hot, Workiva sees big demand for its offerings and the stock does really, really well. Look at the long-term stock price chart. Look at that here. When was the big growth for this company? Oh, surprise, surprise. March 2020 to November 2021. IPO market was blitzingly hot during this time. The stock went from 25 bucks to $160. And it's crashed and gone nowhere for a while as the IPO market has remained kind of dead. But the IPO market is definitely coming back now, definitely coming back. I think it's going to continue to come back. I think we're going to see a big IPO frenzy over the next 6 to 12 months. And I think this rally you saw in Workiva stock in 2020, 2021 is going to repeat here in 2026, 2027. So I actually like this stock as a play on the IPO market getting hotter over the next 6 to 12 months. If that does happen, WK stock could be a big winner.
That's pretty interesting. Based on the discussions we've had before, I feel like it's almost safe to say Workiva is a good proxy for if we're going to get a bear market. If they reach all-time highs, That means the IPO market is red hot, and that means we might be facing downturns, right?
Yeah, the thing is, the IPO market's a contrarian. It's a contrarian indicator, right? I mean, we've talked
Yeah.
about this before. When am I going to get worried? When the IPO market gets red hot. So another way of saying that is I'm going to get worried when Workiva stock is back at 160. Okay,
Right.
Workiva stock I think does double from here. I think it goes 80 to 160, and when it gets to 160, that's probably when I'm going to sell all my other holdings
Yeah.
for subscribers, right? It's like it's a contrarian indicator. You can't run hot forever. Okay,
Right.
that's just how capitalism works. Boom, bust, boom, bust, boom, bust, boom, bust. And right now, the foundation is being laid for us to run really, really, really hot. AI spending going through the roof, AI models evolving rapidly, physical AI applications coming, deregulation, a bunch of government support, consumers starting to feel good, retail folks getting back into it, Wall Street bets regaining energy. Stage is being set for us to run hot, brother. We are going to run hot. And then eventually, when you run hot, you run too hot. And when you run
Mhm.
too hot, you go off the cliff. And that's when a repeat of 2022 happens. Or worse yet, a repeat of the dot-com crash. So that's my concern. That day is coming. That day of reckoning is coming. Mark my
Yeah.
word. I'm I don't think you're going to find anybody in this world more optimistic about the long-term potential of AI to transform everything about everything. I am as optimistic as it gets about that. But even as that person, I recognize AI stocks do not grow to the sky forever. That their path is two steps forward, one step back, two steps forward, one step back. Look at internet stocks, Amazon from 97, 98 to 2025, massive growth. You know how many freaking collapses of 80% or more it had during that time? A bunch. And so guess what? We're looking at all our big AI stocks, Palantir, Axon, big time winners. They'll drop 50% or more at some point. They absolutely will. When the music stops playing, the outcome for these stocks is going to be disastrous. I recognize that. Then they'll bounce back and they'll go to highs they've never seen before. And 10, 15, 20 years down the line, they'll be up 5x, 6x, 7x, whatever it may be. But like I said, along the way, you're going to get some pretty nasty crashes. So I think 12 months, maybe 24 months down the line, sometime in the next 2 years, all of this frenzy is going to reach fever pitch. And boop, a lot of these things are going to drop 50%. Our job, ride the wave higher, make as much money as you can, get out before the music stops playing, and then buy the dip on the other side. Because you're going to get some fantastic buying opportunities after that big correction. My 2 cents.
Got it. Okay. Last but not least, we got TDUP or thread up.
Thrifting, baby. You go thrifting ever?
Yeah, I've gone a couple times.
I always find it fun. I never buy anything, though.
Yeah.
But this stock is a testament to the comeback of the thrifter. This stock, is one of those 2021 IPO darlings. It did a little bit of stuff back then and then crashed and stayed in, desolation territory for a long time. But this was a 70-cent stock in August of 24. Actually, it was a 50-cent stock just before Trump won the election, November 4th, 2024. Now it's $10.50, man. This has been quietly one of the biggest winners on Wall Street. I am kicking myself for not catching this. This breakout came on my radar back in early 25 as one of the biggest winners. It was already up at 220 at this time. And I was like, you know what? I don't think the trade war is going to be that bad. So I don't think this thrifting thing, this resale thing is going to get that big. But you know what? Boy, oh boy, oh boy, was I wrong. And look at this stock. I'm mad at myself. I didn't act on it. Does it have further to go? I think so. I think it does look like a lot of the goods coming in from China, coming in from Vietnam, coming in from the Philippines, coming in from where clothes are traditionally manufactured, that stuff is going to face tariffs, and those are going to get passed on. So I think the retail point of sale is going to see a lot of price hikes. That's going to push a lot of people into the secondhand markets, push a lot of people into the resale market, push a lot of people into the thrifting market, and that's where ThreadUp thrives. So this company is absolutely crushing the game because of that, and I think they're going to continue to crush the game. So I missed it. Once I miss something, it's a personal bias, and this is a terrible personal bias. The best investors do not have personal biases, so I'm sorry I do have a personal bias, but once I miss something, I don't want to get into it. I'm like, oh, I missed it. I'm gonna go find something else. Like I don't want to admit that I was wrong and then get into it too late, and then I get into it and then it starts crashing. So um, I don't like to getting into things after I saw them early and missed them, and then now they've run away from me. But having said that, logically looking at this one, I don't see why it won't go higher. The valuation's still pretty reasonable. Technicals look good. Story's strong. I think ThreadUp can keep on running higher, but I'm not going to put my subscribers into it just because, well, we missed it, and it doesn't really have an AI story. I want to get stuff with an AI story right now. ThreadUp doesn't really have that, so that's the one thing working against it, I would say.
I think it's another fascinating interpretation of the market, the rise of thrifting, and this, along with I think Dollar General is one of the best performing stocks of the year. So it's just more people buying cheaper.
Now that's when we did get into in our breakout trader service. We did get into Dollar Tree. Dollar Tree, this one I got here. This one's been a nice winner, right? Here you had a big breakout, then you had a consolidation period, then you had a breakout or breakdown, sorry,
Yeah.
consolidation period, then you had a breakout of that consolidation. We've been riding this one higher ever since here. So that one's just been on a nice and steady path. But you're right, they're getting Dollar Tree, Dollar General, Thread up. How's Walmart doing? I haven't paid much attention to Walmart in the last several months, but how's it doing?
Well,
No, pretty steady grind higher, right? Good old
yeah.
Walmart, nice and boring. Yeah, so you're seeing some strength over there. Now, if you want to get real risky, you'll go over here. We won't spend any time talking about this, but people who know exactly, they know exactly what I'm talking about. You see what I just pulled up?
AEO,
What is AEO?
American. That would be a gambit. Yeah, that would be a gambit.
American Eagle Outfitters. Uh, if you guys want to make a big bet on politics or Trump being able to sway consumer demand, this is your one. I am not making that bet, but if you want to, that could be something very interesting. Now, so my wife's following that whole Sydney Sweeney drama or whatever.
Yeah.
Um, and she asked me like, "How is American Eagle stock doing?" And I was like, "Oh, well, not that great." And then it had me thinking like, well, it hasn't been doing that great for a long time. And then I just pulled up the chart and I was like, this was a $10 stock in fall of 1999, and it's a $10 stock today. So this stock has gone nowhere. It's had its highs and its lows, but it's ultimately gone nowhere in 25 years. That's incredible. That's wild. And when I look at something like Abercrombie and Fitch, that one has, well, until recently, it went nowhere for 25 years as well, right? I mean, it did have this big recent
Yeah.
surge in popularity, but before that, it was a $50 stock. And back in late 99, it was a $50 stock. So also 25 years of going nowhere. This is the problem with retail, folks. When you get into retail names like Abercrombie, American Eagle, Boot Barn, whatever it may be, you got to get in and you got to get out. These are not names to buy and hold forever unless you got something like Nike, where you really think this is the next Nike. But that rarely happens. Most of these things, they have fleeting trends. They catch lightning in a bottle, they have great growth for 2 or 3 years, and then poof, it all goes away and the stock comes crashing back down. So, Abercrombie, I think it's a great example. It's a stock that we actually recommended for subscribers a while back. We got in and we got out. The stock is still elevated, as you can see, but the lightning that they caught in a bottle is not going to last. This
Mm.
fashion trend, I think they're on to jorts now and like baggy fits and crop tops for men. I don't know. I don't get the crop tops for men trend. That one's kind of weird for me. But these are the trends that are pushing Abercrombie higher. They're on their side right now. They're not going to be on their side forever. Soon enough, it's going to go on to something else, and this thing's going to blow up, and the stock's going to come crashing down. So just beware when you get into retail. Just want now that we talked
Yeah.
about ThreadUp and Abercrombie and American Eagle and whatnot. Just beware when you get into retail. These are not secular growth stocks that go up forever. They go up and they go down and they go up and they go down, and over 25 years they go nowhere.
Yeah, the cyclical nature of fashion, I guess.
The cyclical nature of fashion. Now, again, like I said, there are exceptions to that. Nike, Lululemon is an exception to that. Lululemon has been a big winner for a very long time. The stock has been coming down recently, but like you see, that's a nice chart. I think that if you're looking for exceptions, maybe I'm not saying it is an exception, but maybe Onan could be. Oh, this is a monthly chart. Let me get the daily chart. This could be an exception. This I think it's a Swedish footwear company. Have you owned a pair of these? Do you know what I'm talking about? The On running shoes, On Clouds.
Oh, I'm actually looking at those. I do need a new pair of running shoes, and those were at the top of my list.
Yeah, so my wife owns a pair of On Clouds. She loves them. Everybody loves them. This could be an exception to them. I don't own a pair of On Clouds because, believe it or not, I run on a treadmill in Crocs. Swear to God, for
I
folks
don't
out
think
there
that's good for
listening,
you, man. I think that's bad for your feet, actually.
dude, I wear Crocs for everything. I do squats in Crocs. I do all my workouts in Crocs except for playing basketball. I have three types of shoes. I have dress shoes, I have my basketball shoes, and I have Crocs. And that's it. But I have about a dozen pairs of Crocs. I am a Croc master. Now that stock, I love that stock. It hasn't been doing well because of the tariffs and all that stuff, but this is a stock that I think it's a long term sleeper. I think this is one that can go a lot higher in the long term because the shoes are so great. For those of you that make fun of Crocs, don't knock them till you try them because once you try them, I bet you're going to be a buyer of at least three or four pairs of them, if not more. They're great, absolutely great. Anyways, enough on fashion. Sorry about that.
I got to throw in my favorite Croc fun fact. Do you remember that movie Idiocracy?
Yes.
Yeah, yeah. So set in the future, it's getting stunningly close to our reality currently, but it's set in the future, and there's a couple of scenes where he's in prison, and then the production designer was like, "Hey, we need shoes that look really stupid to put on these prisoners for this, silly future," and the company that provided those shoes was Crocs.
Oh
So
Lord, I did not know
they
that.
they are the shoe of future future prison convicts. So I always
They're the shoe of everything, man.
yeah,
They're,
yeah, the
they're
shoe
of
of everything.
everything. I wear them to the beach. I wore them throughout Montana. I went hiking in them. I go on the river in them. I go on the lake in them. I do everything in my Crocs, and they're much better than flip flops because they're much more versatile. But again, like I said, enough about fashion.
Yep, yep, yep.
Enough about fashion. Crocs is the only non-AI story in the world that I like.
All right. Yeah,
Product
this
line.
episode is getting a bit lengthier, but I do want to retouch on something we talked about at the very top of the episode. It is the not coming, it is the current AI job apocalypse because the jobs report made it clear, the ever increasing bifurcation of have and the have nots, if you will. I want to get it on a more personal level, Luke, with agentic AI and things like that. Even your job, my job also isn't safe. You got Google VO3 as, somebody in production, but your job, investment analysis, it doesn't seem like it's going to be that safe either in the far future. So what are you doing personally to prepare? Like what should someone do that
Yeah,
has
that's a great question. Like I said, it's going to be situations where the value gets aggregated among the few that learn how to use AI effectively to do their job better. And so, with respect to me, what does that mean? Well, I think investment analysis, stock picking, market research, all that stuff is going to be aggregated. The value created there, because the demand for that stuff is not going to go away,
right?
but it's going to get aggregated amongst the people in my position who Best leverage AI to better do all those things. Leverage AI to more effectively and more quickly analyze big market trends, succinctly summarize them and communicate them with the general public. Use AI to create videos on the topic. Use AI to find winning stocks in those areas before the rest of the market catches on. Uses AI to generate buy and sell signals when it comes to stock market breakouts, when it comes to individual stock breakouts, when it comes to individual stock breakdowns. Use AI to predict economic data. These are examples. These are not things that I'm all doing, but these are examples of things that people in my position or in my career should be thinking about doing, in my opinion. Using AI to more effectively predict the outcomes of formerly unpredictable things in the market, such as stock price movements, economic reports, earnings reports, et cetera, et cetera. So this is definitely happening on Wall Street, and it will continue to happen. And you're going to see continued value aggregation among the companies that successfully do that, and value destruction among the companies and firms and people that do not do that. So that's my industry. It's going to happen in every industry. We talked about insurance. We talked about restaurants. It's going to happen everywhere. The select few companies and peoples that successfully leverage AI to do their job better are going to aggregate the value. So my general advice to folks when they're just kind of, thinking, what should I do with my job? How should I be better at this? Learn how to use AI to do your job better. Get on ChatGPT, play around. Get on Gemini, get on Claude, play around with those. Learn about all these different AI tools out there. I know there's AI video stuff, there's AI music stuff, there's AI everything. Just learn about these tools, play with them. You're going to already be ahead of 50% of the public, and then figure out after you play with them for a couple of weeks, figure out how to apply them to your job to do your job more effectively. Turn 8 hours of work into 2 hours of work, free up 6 hours to do more value additive stuff. Now in an 8 hour workday, you get done what used to take you a week or 2 weeks or even longer. That's what people should be doing right now. That's how to prepare for this jobs apocalypse. That's how to prepare for the age of AI.
Yeah, definitely. Either that or go into the healthcare field.
Robots are coming there too, man. Robots are coming there too.
Yep, yep, yep.
My best
Well,
friend's wife just had a postpartum surgery that was done by a Da Vinci robot, Intuitive Surgical, ticker ISRG. Look at that stock. Look at this major winner, ISRG.
whoa.
Absolute beast of a stock. Yep, they have the Da Vinci robots in the operating room. My best friend's wife just had a procedure done by Da Vinci, and they raved about it. So there you go. Or
Is that a robot manned by a human or is it just a robot straight up?
robot straight up. Surgeons in the room, but this robot does precision cuts that a surgeon would saying a surgeon's uncomfortable doing is probably not the correct term, but you're just more
Hmm.
comfortable having a robot do because they're much more precise when it comes to those kind of small precision cuts. So
Yeah,
that's what the Da Vinci robots do.
that's amazing. Yeah, I mean,
Welcome to the future. No industry is safe.
yeah, no industry is safe. Build your moat, build your portfolio. You got to do what you got to do. Now we've had a pretty lengthy episode here. Is there anything else you wanted to mention, Luke, before we sign off?
Yeah, man. Hour 45 we're running right now. Woo,
Yeah.
a lot longer than I thought we were gonna go, but it's because there's so much going on right now, so many
Yeah.
earnings. Again, this is a crossing the Rubicon moment for me. I
Definitely.
felt really strongly about AI before, but now it's just like, we've crossed the Rubicon. The writing's on the wall. Julius Caesar, I guess you could say, Mark Zuckerberg,
Hmm.
Sam Altman, Elon Musk. These people have crossed the Rubicon and they are marching into American society. They are marching into the American economy. They are marching into American demographics, and they are about to profoundly change everything. What was is not what will be. So get prepared for what will be by investing in AI stocks, by improving your AI skills, and by getting better at your job with the help of AI. We have crossed the Rubicon, and into the age of AI we go.
Definitely. Yep. The future is now. Stay tuned to Being Exponential. Well, we're trying to keep you informed on the changing trends to better protect yourself, essentially. But that is all for this week. We hope you've enjoyed it. We definitely have. We'll see you on the other side.